In this video, we are discussing the rise and the fall of Silicon Valley Bank. Since your time is important, here are the chapters. Chapter 1. Introduction. Established in 1983, Silicon Valley Bank was once America's 16th largest commercial bank. It provided banking services to nearly half of all U.S. venture-backed technology and life science companies. Chapter 2. Silicon Valley Bank's growth. Silicon Valley Bank benefited hugely from the tech sector's explosive growth in recent years, fueled by ultra-low borrowing costs and a pandemic-induced boom in demand for digital services. The bank's assets, which include loans, more than tripled from $71 billion at the end of 2019 to a peak of $220 billion at the end of March 2022. Chapter 3. The collapse. SVB's collapse came suddenly, following a frenetic 48 hours during which customers yanked deposits from the lender in a classic run on the bank. SVB plowed billions into U.S. government bonds during the era of near-zero interest rates, but the Federal Reserve hiked interest rates aggressively to tame inflation. When interest rates rise, bond prices fall, so the jump in rates eroded the value of SVB's bond portfolio. At the same time, the Fed's hiking spree sent borrowing costs higher, meaning tech startups had to channel more cash towards repaying debt. Chapter 4. The bank run. While SVB's problems can be traced back to its earlier investment decisions, the run on the bank was triggered and the lender announced that it had sold a bunch of securities at a loss and would sell $2.25 billion in new shares to plug the hole in its finances. That set off panic among customers, who withdrew their money in large numbers. Chapter 5. The aftermath. Regulators said they would guarantee all SVB customers' deposits, but investors in the company's stock and bonds will not be protected. There are already some signs of stress at other banks, but most analysts point out that US and European banks have much stronger financial buffers now than during the global financial crisis. HSBC stepped in to buy SVB UK for £1, $1.20, securing the deposits of thousands of British tech companies that hold money at the lender. Chapter 6. Conclusion. Silicon Valley Bank's rapid growth and subsequent collapse is a cautionary tale of the dangers of chasing high returns and ignoring risk. The bank's downfall also highlights the importance of strong financial regulations and oversight. As the tech sector continues to drive economic growth, it remains to be seen how other banks and financial institutions will navigate the challenges ahead. Subscribe to my channel for more such interesting content.